Alright, hello everyone, and welcome back to Daily Update on my 1000 Day Challenge. This is day 853. So just doing a very quick update. Overall, we do see in terms of a balanced market update itself, we are still maintaining relatively strong for the US equity market, S&P 500, Nasdaq, and even for China equity market, like say Cayman, we are still doing extremely well. But bear in mind that what I'd like to point caution is the fact that we are forming somewhat like a rising bearish wedge formation, which by nature is not bullish. Even it's like the name itself is actually a bearish formation because we are forming a 1, 2, 3, 4, and a 5. So this you can see there's also very clear distinctively reduced in terms of momentum wise on the MACD histogram itself. So there's two things is to very highly take note of. So once we do see kind of clear rejection over here, and prior to that also rejection over here itself, I definitely do lean towards downside momentum, especially in the coming week itself. And if there's not any change in terms of the sentiment in the market, if we do not consolidate above the 20 exponential moving average and break below that, that will give a clear confirmation that this rising bearish wedge would have been completed and that we are actually moving more towards the downside. But that's not to say that we'll definitely form a lower low, but definitely leaning towards the downside, meaning to say we do have some downside momentum that could consolidate over here in the coming few weeks or even months ahead. So that's something to bear in mind. And similarly, over for Nasdaq itself, we're forming somewhat of it, and we're also trying to break a new high to technically form the rising bearish wedge formation as well. So that's something to bear in mind as well. And in terms of ASHR wise, it's not that technically clear, but yes, we do see a 1, 2, and technically a 3 as well, very much similar to Nasdaq. And then on the flip side, KWAP is more towards like S&P 500, where we follow first wave, second wave, third wave, fourth wave, and the fifth wave in this particular scenario itself. So I do think that this kind of formation is generally not healthy. It's very unlikely to have a very strong V-shaped recovery just like this. And even if we do form a V-shaped recovery like this, we generally do have someone like a breakdown that can form a very distinct higher low before we actually break up to that side. Reason being is people who have actually entered long here in terms of catching the bottom wise who potentially want to take profit when it comes to trading wise. So in this kind of swing trading kind of scenario, they will choose to take profit, and then there's where more of the momentum traders will come in along at the lower level itself. All right, so with that said, I've come to the end of today. But we have been finally for Bitcoin itself, we also do see some sort of potential strength yesterday in terms of closing wise. But bearing in mind that this is the first clear retest of the 20 exponential moving average since the break below. So I do think that we're very likely to actually have a very forced break of what we're seeing right now. And we do consolidate here very nicely above the 16K mark itself. I do think that we have a very nice potential that this could be the clear bottom in terms of maybe even the mid to long term bottom itself. But that is also we've got the condition that we do not see a much stronger contagion, be in terms of FTX fallout and also in terms of more companies that could be affected by the FTX fallout itself. And also in addition to that, the traditional financial market will also play a role in that sense. All right, with that said, I've come to the end of today. If you guys have any questions, feel free to drop by your comments below, and I'll see you guys tomorrow. Take care. Bye bye.